So good morning and welcome to RANsquawk. It's the morning briefing for Thursday 25th of June. It's gone through 9 o'clock now in London. So take a quick look around the markets. First of all, starting with the UK. Obviously much of the UK press very much dominated on its front pages by the likes of the King testimony yesterday. Again, highlighting very much the concerns over the growing deficit in the UK and also the continued dispute between himself and the Treasury and the FSA that are ongoing in terms of who will carry the regulatory powers. And aside from that, the OECD as well, being pretty dismal in terms of its outlook on the UK. Indeed, the Telegraph running the headline today that the UK to sink further into the red than any other major country. Again, that has lifted short sterling this morning, and the pound has come under some selling pressure. Did see an extended move lower on the break of 164 on the downside, with touted Middle Eastern and Swiss names selling. Just taking a look at elsewhere in terms of other overnight news. Obviously the main event yesterday was the FOMC rate decision. Did see the Fed, as expected, left rates on that range of 0 to 0.25. But more importantly, they decided to leave their asset purchase program unchanged for the time being. So no more extension in terms of Treasury, MBS or GSE purchases. And then they also said that their target rate to be kept low for an extended period of time. All pretty much as expected, but did see some of those speculative trades unwound, and Treasuries did move quite sharply lower in the wake of that decision, as too did Bund futures yesterday evening. In terms of other news just to be aware of that did happen overnight out of Asia, some comments further out of the Japanese finance minister, who reiterated his tone we've seen for the last few weeks, saying very much that the dollar policy, or supporting the dollar policy and the US currency. And elsewhere, S&P Sovereign Rating Director commented on Japan, saying that the creditworthiness of the country has worsened in the past 3 years since the new PM has been in place, but not enough that S&P would consider at all downgrading Japan's current rating of AA. So just taking a look then in terms of the calendar for today. We'll be looking out for industrial new orders. They'll be at 10 o'clock this morning. And then the main figures from the US today is going to be very much based around the jobs front. We'll see initial jobs and continuing claims at 1:30 London time, alongside the final figures for Q1 GDP from the US, where analysts are expecting it to remain unrevised at a contraction of 5.7%.